Shares of sports betting platform DraftKings ticking higher today after the company reported earnings results where it did cut its sales and profit outlook for the year. Yet you are looking at the shares moving to the upside now, reversing some of those earlier pre-market losses. You're looking at gains of just about 4.5%. We have Jason Robbins. He's the CEO of DraftKings on to discuss. And Jason, I'm curious how you would characterize some of the trends that you're seeing within your business.
Well, really, we feel incredibly excited about the trends we're seeing. The fundamentals are super strong. We had really strong handle growth, user growth, customer acquisition continues to be really, increasing year over year and at lower CACs. Our gross margins improved 300 bips year over year. Our promotional reinvestment rate improved 300 bips year over year. Had 39% revenue growth in Q3. Really feeling great about the trends of the business. I think 2025 is going to be an even bigger year for us, with us on track to deliver $900 to $1 billion in adjusted EBITDA after only 3 years ago posting a nearly $1 billion adjusted EBITDA loss. So very excited about the trajectory and really, I think the future is going to be even better.
Jason, walk us through the cut here to the full year revenue forecast. How should investors then be looking at that?
Well, there's some bad sport outcomes at the beginning of October, but that was something known. One thing about the industry is states publish data, some of them weekly. So I think it was kind of known already that there were some really rough outcomes with the favorites winning and such. And that's going to happen in sports betting. It also swings the other way sometimes too. So we'll see. A lot of time left in the quarter. But I think the exciting thing is that next year we're on track to deliver $900 to $1 billion in adjusted EBITDA, and the growth and the fundamentals behind that continue to be really robust.
Yeah, and Jason, where do you see that growth coming from when you break it down between iGaming, sports betting, just growing your footprint here in the U.S.? What do you see as the biggest driver there as you talk about some of those growth expectations looking ahead to 2025?
Well, I think it's fundamentally driven by user growth. That's really the core. We're way up year over year, and then also our spend per customer and our retention is up year over year. Customer acquisition continues to surprise us. At this point, we thought it would be slowing down in some of the more mature states. It's not. Obviously, a great sign for the ultimate TAM, and I think we're performing really well from a product and technology perspective. In the end, the customer experience is what wins the day. And I think it's going to be, even though customer acquisition is a huge focus now, the long-term game will be won by retention. And I think we're doing a great job on that front. Our product was just ranked #1 across both our sports betting and iGaming. In fact, the #2 ranked iGaming app was Golden Nugget, which is our other brand. So we had the #1 and 2 ranked iGaming apps and the top ranked sports betting app recently. So really feel great about the product trajectory, and we have so many more exciting things planned.
Jason, talk to us a little bit more about what exactly you have planned. And when you talk about the consumer acquisition environment right now, what does it, maybe in a little bit more detail, that look like? And more specifically, what does that tell us then about maybe the likely promotional activity that we could see?
Well, I think we earlier in the year, had a quarter where we really which is long-term a good thing, but short-term underestimated customer acquisition. And what happens is new customers come in and they always get a new customer welcome offer, a promotion, as you said. So when you have higher than expected customer acquisition, even if you didn't spend more on marketing, you end up with higher promotions and cost in that quarter. So we've been really cautious with how we've been forecasting it going forward. On one hand, we're making sure that we have enough promotional budget so that if we do continue to see really hot customer acquisition, we're not burned. And then on the other hand, we also realize that it could start to level off at some point. So from a revenue perspective, we are not counting on that hot customer acquisition to continue at this level. So I think we're kind of balanced on both sides in how we're dealing with it. But it's really one of the hardest things to predict, because ultimately you're talking about how big is the TAM. And I think there's lots of different ways of estimating it. But a lot of people think the U.S. could be by far, much bigger on a per capita basis than many other countries see around the world. And I think you're seeing that in the fact that the growth is still there.
Jason, before we let you go, I got to ask about a second Trump term. We did see you and many of your peers rise as a result, or as we were getting the results from the presidential election. How do you see, or do you see a second Trump term affecting your strategy here going forward?
Well, certainly we're keeping an eye on it, and there is some element of federal it plays into what we do. But really, most of what we do is regulated and legalized at the state level. So a lot of what we were watching were the various races in the state houses and governor's races around the country. And, there were a few changes, but not a whole lot, I think. And so Certainly everyone I know, and from a personal interest standpoint, obviously very intently watching the federal side. And of course, like I said, there is some impact there, but really more of our stuff happens at the state level.
All right, Jason Robbins, CEO of DraftKings, thanks so much.
Thank you.